Success is a lousy teacher. It seduces smart people into thinking they can't lose. Bill Gates. And my friends, when you look at this unrelenting push up for so many weeks after the interim market low on the S&P 500 back on the week beginning the 7th of April, anybody trading this time and following us would think they are just a genius. But I have to tell you, what goes up at some point does come down, and it can come down hard. In fact, the faster it goes up, sometimes the faster it comes down. Now, we see stocks are mixed today. The S&P is down a little bit. The NASDAQ 100 is just a little more than flat. We are down 0.43% on the S&P. Our directional probability is still okay. Backtest accuracy, it's all right. But we're still looking at some expected movement up. About another $13 or so. And of course, your trade analysis and execution plan is available to our Patreon members. We always release the prior days at the end of the current day. And you'll also see in your show notes, you'll see a copy of yesterday's trade execution summary grid. That gives you the ticker symbol, gives you the directional probability in percentages and direction, the entry point, the exit point, the expected move, and the back test accuracy. That stuff is key. And if you want to have it on a daily basis, I send it out first to our Patreon members. In fact, they get it the day before it's released to the public. And I actually prepared and sent the analysis, the full analysis out today before I even recorded this show. It goes out both at the Patreon channel, and you'll also find, if you want to see what the trade analysis and execution plan looks like, you can find the prior days at our Patreon panel. And of course, the link is there in the show notes. I reference show notes. Those you might be saying, where can I find those? Those are published every day at chartingwealth.com. You can go there and sign up for free and get them emailed to you. The best, fastest way to get that stuff. And you'll see the trade execution summary grid for the prior day in there. It will give you a feel for what the information is that you need so that you can proceed to follow these charts and start learning what we show. And when you get serious, you can become a Patreon member and get it on a daily basis. Now, what do we see happening? Well, volume, not knocking it out of the park so far. We look at that's on the weekly. We look at the 2-day, the Monday, Tuesday. We didn't hit average volume. Red doesn't mean negative volume. It means we opened lower than the prior close on the 2-day candle, but we are above the weekly trend line. We can see where things popped up in the afternoon, popped up in the morning, pulled back in the afternoon. You can see where we had average volume here, pretty decent on the half day for a while. But what has it been doing? Sliding sideways, tending up a little bit. But again, as we look at the high this week, it is 627.86. It was 626.87 last week. So we have notched up a little higher, but it sure is going slow. And for the day, actually down. Did pop up higher this week, but down a little bit for the day. So we're still bullish. We're still looking at an up move. We still have some direction to go to until we start hitting some really key points of resistance. So we'll continue to wait, watch, and see. And of course, we're still in this trade long on the S&P. And again, remember, we don't give stock trading advice. We're an education firm. You don't pay us for that. We are here to help educate you. We encourage you to practice trade. When you start getting good, in fact, today I'm going to put at the end of this video, fractional trading. Those of you tired of paper trading, one thing you can do is start jumping in with small dollar amounts. If your online broker allows you to do a fractional trade, you could do $100 worth of the S&P 500. Again, when you look at something like TLT, it's in the $80 range. HODL, $33 or so. So again, you could buy a couple of 3 shares of that. But you keep up with it and you actually get to practice by fractional trading. Sure, if you have a really bad time, Maybe you lose a few dollars. You know, if you lost 20% of a $100 trade, that's 20 bucks. What do you get from that? Well, you get to hold yourself really accountable because dollars are dollars. And it actually shows you how good or crappy you are. In addition to that, you get to practice your entry points, your exit points, all that stuff about putting in a good till canceled sell order, seeing how it is to enter, how it is to exit trades, learning those things by, if you just don't quite know the lesson of how important it is to pay attention to your buy and sell and the liquidity of what the ETFs or stocks you're getting into, you'll learn that real quick if you buy something illiquid. And the minute you enter it, perhaps you enter it even the wrong direction. And you know, when you're perhaps jumping into some options, and all of a sudden you realize, oh no, I jumped in the wrong way. I need to get out. And then you realize, oh man, the spread is so bad. You can find that on some ETFs. Try DGZ, the gold inverse. Illiquid. When they're illiquid, that means that they don't, you know, what do you get when you get $1 from the bank and you go to use it? You get $1 back, right? That's about as liquid as things get. If you go buy a brand new car, drive it off the lot, and then try to bring it back and sell it back to the dealership, you might lose several $1,000s. That's illiquid. You learn that in the stock market really quick when you start doing some real practice trades fractionally with a small dollar amount. So, enough said there. Let's keep moving through these charts. The NASDAQ, as I said, up a little bit, 0.09%, reaching a higher high this week. Volume, it's okay for a Tuesday. Didn't hit average volume, haven't for 4 candles now. And again, just a little green up candle. We look at where things popped up in the morning and not quite as much in the afternoon, but of course didn't roll over down like the S&P did. So again, we are still long. We're not as long on the NASDAQ as we are on the S&P. Backtest accuracy not quite as strong. Again, you'll see that Patreon members in your trade execution summary grid. Let's move on to bonds. Again, I told you when I saw bonds break this green up candle and rotate over, made me go short on them. TBF is the inverse fund for bonds. And again, we like TBF. I would encourage you to practice trade that when you get a chance to go short on bonds. We are, it's okay now as far as the directional probability goes. Has a little bit more room to move. Not a whole lot, but again, backtest accuracy, about the same as the directional probability, which is down a little bit better in a coin toss. And again, getting in after the down movement in the second week. I'm not for doing that, but it is down. It is bearish, and you can see where things bounced off the weekly trend line back on last Thursday afternoon, and then moving down Friday, Monday, Tuesday, down 0.70%. Down movements only beaten out by HODL. Let's move on to where we are with gold. Now, I can't even draw a trend line on gold because it's so damn flat. You can see where we peaked on gold back on the interim high back on the week beginning the 9th of June, and then sort of started dying the next week, down the 2 prior weeks. And then this week and last week, as we look at things, and I said the 2 prior weeks, the 2 subsequent weeks, and then this week and last week, we can see where a green spinning top, almost a doji. This week, you can barely see the candle. It's a line. It's sort of green, it looks like. You can see on the 2-day, hadn't had average volume in the last 4 days since the 2-day down candle, where we did hit average volume on a red candle. So again, where are we? Well, the best we can say is we're sideways. We're about a 50-50 on gold. Nothing I'm going to be trading on until gold sorts its way out. And we're just going to have to wait and see. And when it does, we'll look to jump into gold and ride it whichever way the charts tell us when we have a big enough directional probability. Let's move on to Bitcoin. Where are we on Bitcoin? It's still our strongest up move in directional probability. And in fact, let me see. I'm looking back over our trade worksheets. Yeah, it's been just sort of building and then staying. So we're comfortable with Bitcoin. It did pull back today, 2.86%. You can see on the half-day chart where it pulled back. You can see on the 2-day chart a nice big green up candle with increasing volume. And again, we're not too far away from average volume already on the half-day chart, and we're reaching a higher high. So after rocketing up for several days, starting slowly and then starting to climb on Wednesday morning through Thursday, Friday, Monday, and then sort of peaking out Monday afternoon and then down on Tuesday, we are still long on Bitcoin. We've got that 2-day powerhouse of volume. Nice candle for this week. So again, pulling back some for the day. We'll see where that leads us, but it doesn't take us off being bullish on Bitcoin. Hope you've been in that trade as it started to build and accelerate. Again, we know Bitcoin tends to move up and then can pull back strong. And again, what was interesting about this latest move up is that it slid sideways, looked like it was weakening until the week beginning the 30th of June when it just started building. That is where we are, folks, as we end the day on Tuesday. Always love to hear from you. cw@chartingwealth.com. Look there on the screen. If it's not already there, it'll be there in just a moment, about our fractional trading, the next step after paper trading. God bless. All the best from the whole team at Charting Wealth.